Stephen, for that extremely kind, comprehensive introduction. And thank you all for having me aboard today. I can honestly say I'm absolutely chuffed to be here in Hobart with you all today. So I've been asked to provide a very high-level sort of helicopter perspective outlook for China's economy. And it becomes rather apparent when you're at those lofty heights that Tasmanian exporters are actually quite well placed to benefit disproportionately from China's economic transition. So I'll endeavour to outline exactly why we think that is, and I'll also, with a view to seeing where the opportunities we think will arise. Here we go. Look, I'm on the cusp, but I'm not Gen Y, so bear with me. So China's economy expanded by an average of 10% per year over the 10 years to 2015. And that was driven by rapid urbanisation, rapid industrialisation, and indeed greater openness. Now, we have seen some recent policy support from Chinese policymakers, but still the economic juggernaut is expected to record its slowest pace of growth since 1990 this year. The IMF are expecting just 6.6%. So holding back growth is a huge stock of unsold housing, as well as substantial excess capacity in key industries. And China is also slowing due to structural reasons, things like population ageing and declining labour productivity gains. So unfortunately, we do think that this slowdown is likely to persist. Now, it is true, you can see from the first chart, that GDP output remains strong, and that owes to the enlarged size of the economy. But it's also true that the risks are increasing, and you can see from the second chart that in particular, a continued reliance on credit to drive growth has led to unsustainable debt accumulation. It's also led to the IMF and their BIS issuing escalating warnings. The fund now considers corporate debt to be a key fault line in China's economy. But despite that more subdued and that more precarious growth outlook, China is still creating strong tailwinds for Tasmania's exporters. And firstly, that's because China's economy is slowly rebalancing. It's moving away from commodity-intensive, investment-driven growth towards a more sustainable consumption-based model. And that rebalancing, we can already see it in the data. So the first chart shows China's tertiary industries. That's just Economist speak for services. They've actually overtaken secondary industries, which is a secret code for infrastructure investment and utilities, as a share of China's GDP and of its growth. And you can see from the second chart that that's causing Australia's export profile to rebalance in itself. It is in the margins, but it's from mining towards non-resources. So the second tailwind, as we see it, is China's rapidly expanding middle class. China's already home to the world's largest adult middle class population, but McKinsey estimates that the number of working age consumers will expand by another 20% by 2030. Now that's equivalent to additional 100 million people. And more importantly, you can see from the first chart that the share of China's population that's considered upper middle class or affluent, that will increase from 30 to 80% of the population. So those households, they're spending less than 50% of their income on necessities, and they display a pretty distinctive consumer behaviour. They're sophisticated, they're seasoned shoppers, and they're able and willing to pay a premium for quality discretionary goods. So by 2030, we expect that consumer spending in China will more than double to 6.7 trillion. That's a huge surge in middle class spending, and we think it owes to at least 4 different factors. The first is robust income growth. So disposable income per capita increased by about 11% over the over the last 10 years. The pace has slowed, but the IMF still reckon that wages growth will be above 8% for the next 5 years. So certainly the envy of the average Australian worker, certainly the envy of myself. The second factor is low household debt. At 40% of GDP, Chinese households have about half as much debt as their American counterparts. they're also optimistic about their financial future. So a recent survey by, again, McKinsey found that 55% of Chinese households are confident that their incomes will rise strongly over the next 5 years. Now, that's far more bullish than their US or UK counterparts. It also means that they're more likely to spend a greater proportion of their income relative to those previous generations. So my fourth and final factor is, of course, urbanisation. Rural-urban migration has been a key driver of growth over the past 15 years. And you can see from the second chart that Chinese policymakers, well, they're not finished yet. They aim to lift the proportion of their population that live in cities to 60% by 2020. So these four factors combined mean that Chinese consuming class, they're so increasingly numerous, they're so increasingly prosperous, that they really do have the potential to reshape global consumption patterns, just as for, say, the baby boomer generation of the West has done, as Stephen alludes to, his generation right there. So we have established, we've established that there is this much hyped economic slowdown going on in China, but yet consumer demand is expected to remain buoyant. And I just want to say a little bit about the improving accessibility of the Chinese market. So we've had nearly a decade, we've had 21 rounds of intense negotiations, but finally the China-Australia Free Trade Agreement, it entered into force last December. Now, CHAFTA delivers unprecedented access into China's burgeoning agricultural and services markets in particular. So, for instance, tariffs on all Australian seafood exports will be progressively eliminated by 2019. So for Tasmania's top 3 seafood exports, of course, abalone, Atlantic salmon, rock lobster, that means that tariffs of between 10 and 15% will finally be rid of. There's also been an upsurge in online purchasing, and that brings the Chinese consumer a whole lot closer to the Tasmanian exporter. So the second chart shows that China's mobile netizens, as they call them, they've actually grown by 600 million people over the decade to 2015. So China's online retail market is now the world's largest. It accounts for about 40% of the global total. And that market is certainly dominated by Alibaba, that's true, but foreign retailers are also sharing in the growth. So during Alibaba's 24-hour Singles Day event last November, Chinese consumers purchased a whopping 14 billion worth of products. And 33% of those Chinese consumers purchased from an international brand. Now that's being helped by cross-border e-commerce pilot zones. They've lowered the barriers for a Chinese person to purchase an overseas good online. They were established in late 2013, and within 2 years that actually processed 100 million parcels for foreign web merchants. And that growth, we think, will continue to be supported, not only by technological advancements, so we're seeing improvements in last-mile cold chain logistics, we're also seeing new partnerships. So you may have seen earlier this month a deal was done between Alibaba and our counterparts in Austrade, and that will create a dedicated promo channel for Australian companies on an extremely popular Chinese video sharing website. Also going our way with China's economic rebalancing and its declining or waning demand for commodities has led to a more competitive Australian dollar. So the first chart shows that commodity prices have more than halved since their peak in mid-2011, and over the same period the Aussie dollar has fallen about 20% relative to the currencies of all of our major trading partners. So that's boosted the competitiveness of all of our trade-exposed sectors, no doubt, but EFIC's own modelling finds that the timing and the magnitude of those benefits, they differ across export industries. And agricultural and services exports are by far the biggest winners. So a 10% permanent decline in the real exchange rate actually boosts those exports by around 7%. Now, it is true that the Aussie dollar has not been cooperating, and it's appreciated about 5% since last September, and it may therefore offer less support this year if that recent stickiness continues. But on the upside, we've also seen a substantial loosening of financial conditions. We now have lower interest rates, and that helps the prospects of non-resource exporters. And lower commodity prices in themselves are actually a huge help because they lower import and import costs. Okay, so my first preference was that Tasmania exporters are responding to and they're benefiting disproportionately from China's economic transition. So you can see in the first chart that after several consecutive years of contraction, that Tasmania's merchandise exports to China actually increased 80% last financial year. And over the same period, Australia's total merchandise exports actually fell 1%. Now, the services data is a little patchier, but latest data does suggest that Tasmania's services exports comprise chiefly of education and tourism. That also increased strongly in 2015. And that's very much because China's economic rebalancing and its rising middle class, both of those factors bode really well for industries where Tasmania is comparatively strong. So I'll focus my last remaining comments on tourism and education, and also high-end agriculture and aquaculture in particular. So despite China's much hyped economic slowdown, a record 1 million Chinese consumers came to Australia last year, and they spent just over $8 billion. You can see that in the first chart. But Tourism Australia reckons we can do better. They think the market could be worth up to $13 billion a year by 2020. And it's not too hard to start to believe. So Australia is currently attracting just 1% of the Chinese outbound tourism market, and just 5% of the 1.4 billion strong population currently owns a passport. So the number of Chinese coming to Tasmania, to our shores, has grown significantly. It's up about 30% a year over the past 5 years. But importantly, Tasmania is still attracting just 3% of the Australian total. And we certainly think there exists much scope to increase Tasmania's share of this rapidly expanding pie. So the second chart also shows research from Tourism Australia, and it suggests that when a Chinese tourist is deciding where it might like to go on their next holiday, they think first and foremost of 3 factors. So world-class beauty and natural environments, good food and wine, safety and security. So you certainly don't need an economist in front of you to tell you these are all things that Tasmanians are pretty darn good at. International education exports are also posting very healthy growth, about 10% last year, and China again fueled that performance. Chinese students, you can see from the first chart, they account for about 30% of total international enrolments at this stage, and we think that that strong demand will continue. So that's not only because of rising incomes, but also the recent relaxation of the one-child family planning policy. McKinsey actually estimate that $1.25 out of every $10 of consumption growth over the 2015 to 2030 will actually be in education. And you can see from the second chart, though it's very hazy, that that's higher than for any other country bar Sweden. So agribusiness is, of course, another sector of obvious continued opportunity. The world's most populous country is expected to account for almost half of a 75% increase in world food demand between 2007 and 50. So to date, China's placed a whole lot of importance on food self-sufficiency, but imports are expected to increasingly fill that gap. And indeed, you can see from the first chart that despite the slowing economy, food imports are rising strongly. Now that's due to China's declining arable land due to things like increasing urbanisation, as I spoke to earlier, and environmental degradation. It's also because rising incomes are leading to what we call consumption upgrading. So firstly, that means that Chinese consumers are focusing more on healthier lifestyles. Secondly, it means that they're spending less on mass market products and more on quality premium ones. So for example, the share of premium milk has actually increased from 8% in 2008 to about 20% lately. And from our position in the world, it does seem that Tasmania is incredibly well placed to be able to service that pending calorie boom. Resource and capacity constraints obviously mean that Tasmania can't become the food bowl of Asia or of China, but there's certainly, we think, a competitive position for Tasmania as perhaps the delicatessen of Asia. So China's sheer scale and size means that quality niche products can absolutely thrive there. So already we're seeing companies like Bellamy's Organics, like Reed Fruits and Hanson Orchids, they're winning premium sales in niche markets by trading on that very clean and green reputation of the Made in Australia logo. And premium salmon imports into China are another great example. So they're showing returns for countries like companies like Casa Tasmania, like Huon Aquaculture and Petunia Seafoods. And you can see from my second chart that success is already showing up in the macroeconomic data. So the light green line just expanding wildly. So I will leave my comments there, but if you just indulge me by way of conclusion, there is no doubt that the economic juggernaut, the superpower of the Middle Kingdom, it is slowing, and the risks are undoubtedly rising. But middle-class consumer demand is expected to remain strong, and when you couple that with the increasing accessibility of the Chinese market, as well as the more competitive Australian dollar, we do feel that Tasmanian exporters will feel the benefits of China's economic transition for many more years to come. Thank you.